Welcome to Investors Insights. Our topic today is, really? The reason we chose that topic is because on Friday, the market traded down. And it traded down because news came out that the negotiations in the U.S. and China tariffs talks were cut short, and the market reacted to that. Well, guess what? The Chinese decided not to visit a farm in Montana and to head back home. How many times have you been on a business trip and you go, you know what? We're cutting it close to catch our flights or be where we're supposed to be, and we're on our way. But the market took it as though the Chinese weren't happy and that the talks ended poorly. We're in a kind of market that will give knee-jerk reactions to any news that hits, as well as the fact, a big debate about the Fed right now being wishy-washy. Rates go up one year, rates come down the next year. All of this is causing a lot of emotion and volatility, and Ashley Page and I want to talk about that with you today. So Ashley, talk a little bit as we were going through this. We talked about the China-U.S. tariffs.
Yes.
We also talked about the Fed.
Yes.
And how everybody is wondering, wait, last year interest rates went up. Now all of a sudden we're bringing interest rates down. Europeans and other people throughout the world have more confidence in our U.S. Government securities than probably most Americans.
That's right.
And that's a problem. And we've got opportunities here. You brought up some great points in our debate and discussion this morning. So let's talk a little bit about that in relation to consumer confidence. Things are looking good. You want to elaborate?
Absolutely. On the Federal Reserve, Greg's exactly right. You know, the focus last week, of course, was the quarter-point interest rate cut.
Right.
But what we want to highlight to you is, in addition to that, on Friday, the Federal Reserve hit the New York Fed with a lot more liquidity that can go into the markets. Now, that's why, as Greg's mentioning, that's why it's important. Europe can't do that.
Right.
But we've got the ability to hit liquidity into our market very quickly. They did that.
Right.
When that happens, it's good for banks. They can lend more.
Right.
So if companies are looking at buying a large piece of equipment, they're right on the fence.
Sure.
That's very helpful to do that. Banks can be a little bit more liberal in what they do. So in addition,
it's a positive indicator across the board.
In addition to the interest rate, you can't just look at the interest rate cut. It's the other mechanisms on their balance sheet they can use.
Right.
Well, they used a large one Friday, which is great. On the consumer confidence side, you know, we were a little bit shaky in August, as we've always said. That's always historically sort of volatile month. But the consumer confidence kind of roared back. Greg and I were talking about that this morning. If you compare where stocks are, where treasury yields are, and the recession indicators have really dropped, the consumer confidence is back. So when Greg and I were mentioning that, you know, you've got some issues like that and the volatility around trade, but they're manageable.
Well, and in addition to that, not only is consumer confidence up, but we are going to talk about savings rates here in just a second. Americans are saving.
Oh, they are.
Which is a big positive. And I think this Thursday you also are doing a special vlog in regards to that.
Correct.
And that ties into the financial blueprint in terms of lifestyle room, in terms of people saving money, maintaining their lifestyles or actually doing better. It also ties into the financial opportunity profile room, risk return analysis. As I like to say to people, if you had to choose between your money outperforming the S&P 500 index or you achieving your dreams and goals, which hand would you pick? In 30 plus years, nobody's picked the S&P 500. Right. They've picked dreams and goals.
Absolutely.
So Americans are confident as they work towards those dreams and goals. Talk just a little bit about that.
Yeah, Greg and I were talking about this morning. The structure of when the savings rate goes up has really changed. It used to be back in the day when your father's saving rate, when you came out of the back of a recession, savings would start to go up because people were a little bit fearful. They were trying to restore their own balance sheet to get through it. Now, Greg's exactly right. Over the last 10 years, this has been a really unusual expansion in that usually when you have an expansion, they start spending again.
Yes.
The saving rate is small. But our savings rate this past year has been like 8.2%. That's been unprecedented for the last 10 years with a recovery. Now, Greg made a good point this morning when he said, well, part of that is aging, that trade tracks a lot for us.
Yes.
And part of that is aging, and that's kind of natural with a little bit more going to the workforce. But when you extract that, what we feel like going forward is once we eventually hit a next small recession, whenever that is, the savings rate is higher, and we ought to be able to play through that better because people have more to spend.
Yeah. And right now, as you look at the stock market, there are no guarantees, but we're seeing the stock market building a base. We may see a rally take place that may take us to higher highs if earnings continue to come out positive. We're seeing companies also, with interest rates down, making acquisitions, probably looking at mergers and acquisitions, certain debt financings. People also, in terms of the housing market, is still looking positive at this point in time. So if you tie all that together in relation to your financial blueprint, if you're one of our clients, is that you want the plan in place to tie into the strategies in the portfolio and then proactively manage to make sure you don't take on too much risk as things continue to be volatile. And at the same time, as we said today, really don't get emotional in the volatility of this market. If there's debate about is the Fed going to lower rates or not, is China and the U.S. ever going to solve the tariff issue? These two will pass eventually. And so knowing that corporate earnings are good, consumer confidence is up, people are saving money, innovation and technology continue to move forward, a lot of positives going on. And on that note, please share this with your colleagues, your friends, your family, and hopefully they too will get information from it and understand as well in terms of the philosophy of Five Plan Partners that here we believe you need a financial blueprint tied to portfolio strategies to make sure you're on track to get to where you need to be. We hope you have a great week, that this has been beneficial, and we're going to keep you updated through all this volatility. And remember this, we're getting ready to start fourth quarter here soon. This year, 2019 is almost over, and right now we see a lot of positive things. Have a great week.